So welcome to the Caseblocks webinar on advanced claims automation for the insurance sector. I'd like to start by introducing our panel. We have Paul McGlynn, CEO of Caseblocks, Jonas Kisselbeck, CTO of Caseblocks, and we're delighted today to have Marco Matthias, lead insurtech consultant from IQ Business, who's conferencing in today from South Africa. It's wonderful to have you all here today. So before we discuss the technology required for claims automation in insurance specifically, I'd like to uncover some of the changes we're seeing in the insurance sector and the effect that that's having on the industry and claims in general. So Paul and Marco, can you give us a general overview of the trends in the sector and perhaps touch on the change which COVID is bringing?
Thanks, Ali. Well, first of all, it may make sense just to give a little bit of backdrop behind what insurtech is and where it came from. Certainly in the UK, from the UK perspective, 20 years ago, the relaxation of financial regulation saw the emergence of the fintech movement, which has become more formal over the last 10 years. But certainly even as far back as 20 years in the UK, we saw the emergence of companies like Intelligent Finance and Egg Banking, which were offering online-only banking and credit propositions. That has become a bit more formal over the last 10 years, and certainly the pace and the variety of technology in the sector has grown. For example, fintech has brought us cryptocurrencies, a vast array of payment channels, hybrid banking products, credit agency consumer products, mobile banking, stock trading for the masses. And all of these things, have appeared over the last 10 years and were unthinkable really 10 years ago. And basically you can now conduct all of your financial business on a mobile phone. The insurance sector is catching up. It's not necessarily going through the first full cycle of revolution that the banking or the retail banking sector has gone through, but it is certainly catching up. And in the UK, the FCA sandbox allows new customer insurance propositions to be trialled under lightweight regulation and under the eyes of the watchdog. So the barriers to entry are coming down, and what we're seeing is certainly lots of new short-term insurance propositions, making it easy to apply for, easy to claim for, pure online experiences, and bypassing some of the traditional insurance companies. Distribution and supply chain networks and related technology have always been areas of investment for insurance companies, and over time, technology does tend to disintermediate, so there will be more pressure on the broker and the supply chain to add value within the insurance processes. Complex long-term insurance products such as life, medical benefits, the barriers to entry for these are still very high. The investment required for compliance, reserving, people processing technology is still very high. So the traditional players in those markets are potentially likely to prevail in the short to medium term. And then obviously we have COVID, which has had an impact in different insurance classes. And while 2020 insurance company earnings are likely to be higher given claims volumes have reduced, 2021 will probably see depressed cross-sector earnings due to the lack of new business being underwritten in 2020, especially in group. But if you look at things like home insurance, COVID has changed that. I mean, it's just more difficult for those insurance classes where there is a high customer touch point during the claims process. It's difficult for those claims to be followed through. So, for example, home contents or even home property insurance, loss adjusters and builders, are finding it difficult to access properties and actually carry out works. So you're seeing an increase in cash settlements, and their technology such as video streaming, is likely to become more useful to the insurer so that they can do remote assessing and remote damage assessing and that kind of thing. Health insurance has a corollary because ultimately patients need to engage in person within the health services process. So again, things like video-based recording and image processing technology can help here. I mean, it's not clear what the limits are practical given the sensitivity of that data, but we expect to see more technology and more new entrants appear in this market. So COVID is definitely going to leave a legacy. It's not clear what it will be, but certainly as a solutions provider in the space, it's an exciting time to be here. Then we think that COVID might be a significant a kick for the insurtech sector.
Okay, thank you, Paul. And Marco, are you seeing similar changes in South Africa or the Asian markets?
Yes, we are. It's a very mature market. So the market has a lot of competition, a lot of which brings a lot of innovation. But it also has to observe, obviously, the highly regulated industry. So that brings us a lot of opportunity, though, to build a lot of automated rules and a lot of checks and balances that protects the benefit leakage of an insurer. At the same time, they need to be competitive. So we need to build products that can increase their client base, retain their client base. So what we're seeing is a lot of the insurers are moving towards health and vitality type of products. So proactively managing the health of the client in the healthcare space, in the short-term insurance space, there's a lot of AI happening. So we know in which areas the client lives. So we can also overlap the weather patterns. We can let them know, move your car under a covered parking. So there's a lot of AI happening in the space. And all of this really reduces the premium for the member and for the customer. So that expands the insurance base. So in areas where there's not a lot of private insurance, we can expand that by bringing down premiums, by bringing these innovations in. So I think product design and helping our clients design better products and also observing the client base can predict what type of automation we could bring to that product. So that's really the stuff that we're observing right now, a big movement towards being more innovative, more risk averse, and helping clients manage their own risk, manage their premium, putting them in control of premiums, what they want to buy, and making them more healthy in the medical space. So I think it benefits all. That's
fascinating. So I think overall there's this idea that the changes in the insurance sector are also, COVID to some extent is acting as an accelerator from what you've said, Paul, to make these changes happen faster, but also what you've been saying, Marco, which is really interesting, is using data, using all this data sources we have to create better products and more innovative products as well. So focusing on the insurance claims world more specifically, what specific technology trends and tools are insurers using to create these new, better claims experiences for customers?
Thanks, Ali. So I think a claims system ultimately is really a combination of components, which is there to deliver a customer claims experience, across a broad range of insurance products, customer types and geographies. And some of these components you'll find bundled within a policy administration system, or alternatively, you'll see them as single purpose modules, which are then combined within an overall claims technology stack. And that's what's of interest to Caseblocks, obviously. And the core challenge, of course, whenever you're delivering a claims system or a claims transformation project is to deliver a number of things. One of them being maximum levels of automation for a specific type of claim, because all claims have different levels of automation possible. And you're wanting to really kind of shift the needle on the important performance measures of turnaround time, cost per claim. And these are important to insurers when it comes to making sure costs are controlled and obviously customer loyalty is improved and churn is reduced. So claims ultimately is a simple process. And at the end of the day, all you're doing is you capture a claim, you assess it, and then it's settled. So as an industry process, it's relatively simple at a high level, but it's when you come down into the detail that it becomes a more interesting process and more complex. We're going to see a demo later on today where we're looking at actually what happens at the moment of truth inside a claims process when you're assessing it. The settling part of the process is relatively straightforward, getting money into the hands of the claimant. And the capturing of it usually is done in mobile channels, but by and large, there are a range of components which you'll see across most claims environments. So for example, some form of automation platform, which is responsible for managing the claim information as it's processed from start to finish, captured from websites or mobile devices, assessed, and then ultimately sent for payment. You'll have a rules engine, which is there to embody the rules of the product, the insurance product, and that allows the claims department to in effect automate all of the decisions which have been designed into the products. And that's where you get the biggest bang for buck in automation, we believe. And again, that's something we'll be able to look at later on. Obviously, machine learning and AI is a huge area of investment in the insurance sector. So you'll see it in areas such as identification of fraud, reserving estimates, OCR for image processing, bot-driven claim capture, inquiries, sentiment analysis during claims handling to identify churn risks. So AI is becoming more and more important in the process. There's still an end-to-end process to manage, and AI is helping at certain moments in that overall process. You'll see integration technology, which is responsible for integrating the claims system with your policy administration system for up-to-date policy data, benefit utilizations and such like. Also, the integration technology is there to integrate this claims system with what are multiple touch points, whether it be to brokers, to websites, to mobile applications, anywhere where a claim can come from, hospitals. You'll also see things like document production and email systems, which manage some of the formal and ad hoc communications during claims handling. You'll see portals for supply chain management, supply chain where insurers are able to distribute and receive communications with their supply chain. You'll see EDI for document handling during claims processing, and obviously wrapping around that, you'll have things like reporting tools used to monitor and measure, the progress against the important KPIs, such as turnaround time and cost per claim, as we were mentioning. So that tends to represent, by and large, a full technology stack. Over to you, Alec.
Thank you. So a huge range of different technologies. So it's really interesting just to hear the different elements that are involved. Marco, from your consulting background, what's your perspective on the use of technology? What's the use of technology, and maybe you could touch on some of the offerings from IQ Business as well?
Absolutely. So I think Paul touched on all the full stack in terms of receiving the claim to paying the claim, and we all understand OCR and the integration to the bank payment files and so forth. Those are almost these days non-negotiables for many administrators, many fund managers, many risk managers. So these are things that we do every day, and we do them well. So those are the easy ones. We then look at the actual management of the risk of the actual fund manager, of the guys who are paying the claims, which is 80% of the budget, right? So we want to restrict benefit leakage. We want to manage products well so that the analysts and the actuaries have enough data so that they can plan the products for the next year and attract new customers and retain the current customers. So it's all of the big focus for us is having sophisticated rules that ensures that there's no benefit leakage and fraud happening within the claim process. So I think the automation is awesome, and it's the sexy stuff, and we do it well, and we really enjoy doing those. But the big money lies in protecting the risk and the solvency of the insurer that protects the premium for the customer at the end of the day, which means that they don't have to pay more at the next year and the next year, and there's people who are abusing the benefits. So we build sophisticated rules, automated rules with limited human intervention to do the clinical and medical case management of a claim. So that's really where we are focusing right now, and and we have a library for that's basically industry specific. So it's very specific in terms of medical claims versus short-term claims versus long-term claims, that you need to focus on what the trend and behavior of a claim case would be. So really that's where we focus right now.
Thank you, Marco. I think that's quite a good slot now in the webinar to actually look at how an accelerator like Caseblocks can automate claims for simple and complex products. So now I'd like to hand over to Jonas, who'll demonstrate an automated process for a home contents policy.
Cool, 1 second, please. Okay, so what we're looking at here in Caseblocks is what we call a bucket of home contents claims that have come in probably through the website or through a mobile app.
Sorry, Jonas, I can't see your screen actually.
Let me just try that again. Can you see my screen now?
I can.
Cool.
That's perfect.
Okay. I'll pause and then I'll start again.
That's fine.
Okay, so what we've got here in Caseblocks is what we call a bucket of claims, claims that have probably come in through the website or through a mobile app. And a bucket of claims is really just a container. We have buckets of policies, products, members, and in this case, like I said, a bucket of claims that are all waiting to be assessed. They're all currently sitting in a ready for assessment state. They have their policy holder and policy details attached. They've all been filled out to some degree. And one of the first levels of automation that Caseblocks gives you is the ability to run whole processes in bulk. And so one of the things that we're going to do now is to run the initial assessment process on these 7 or so claims to get a response from the rules engine to see which ones can be readily accepted and paid out, and which ones would be referred to a claims handler. So in this case, I go into run a task, and Caseblocks will then offer me the option to choose a task from the predefined list of actions. In this case, the assess claim action. And so when I run this, what we'll see is that this bucket of 7 claims that are in a ready for assessment state will be drained and emptied, and these 7 or so claims will end up being divided into the accepted as well as the referred to bucket. And so we've now split the claims into those different buckets. And so what we can do now is we can look at the referred claim here, drill down into it, and as a claims handler, I would look at the assessment outcome that I've just run, and I can see here that a variety of rules have been run against this particular claim, and we can see that the claim amount is acceptable. The premiums have been paid within the last 31 days. The property, because this is a home contents claim, has not been sublet. However, the claim is outside of the 10 days of the event. So the rules engine in this case has been configured that you have to claim within 10 days of the actual insurance event. And if you claim outside of that, then that's classified as a fail, and therefore that claim is then referred to a claims handler for further investigation. Okay, so the claims handler would go through, discuss this with the customer, find out whether or not to decide to accept or reject the claim, and then that claim would then be passed on to if the claim is accepted, the claims handler would come along here and hit the accept claim task, and you would see here that the status has now moved on to accepted, and payment would be raised. Now, the rules engine, which is the core part of this. It is set up to look at each of these claims, look at the detail of these claims, and evaluate this claim against the pre-configured list of rules. So the rule that failed in this case, which is the maximum claim time from event rule, it takes its data from this claim. So it takes this incident date, which is when the insurable event happened, and compares that to a variety of other pieces of data that are related to this claim. And so what you'll see in a minute is that it'll take the incident date and compare that to the claim date, that when the claim was created, and a variety of other kind of policy level type information. Now, all of this data is fed into the rules engine by following along the trail that starts at the claim. And from the claim, we go to the policy. So this is the policy related to that claim. And that policy is linked to a particular insurance product, which in this case is Home Content Silver. And if we drill down into Home Content Silver, we see that besides things like insurable events and uninsurable events, this particular product is linked to a rule set. And the rule set, in this case, the standard rule set, is made up of 6 different rules. These rules can be, changed and added and you removed from, so that you, as Marco was saying, you end up with industry-specific rules that are suitable to medical claims or home contents claims. But they'll also share from a benefit of a collection of standard rules. So, the standard rules could be things like, well, do they have a valid policy? Is the policy paid up? Whether you're selling, home contents insurance or automotive insurance or travel insurance, some of those same questions are asked of the rules engine, and then can be further specialized by adding industry-specific rules. So if we look, for example, at the valid claim date rule, which is shared by pretty much every insurable product, you can drill down into the valid claim date rule definition, and you can see here that this valid claim date rule takes 4 separate parameters to come to a decision. It needs to know the start date of the policy, the end date of the policy, and it needs to know the claim date. Besides those 3 dates, it needs to know on a product by product specific basis how long the initial cool-off period is of the insurance product. So for example, if you had in this case, a silver product, you might say that the claimant can't make the policyholder can't make any claims within the first 60 days of the policy. But if you had a premium insurance product, you could say, well, you could define a separate product with a separate rule set and change that exclusion period to only 30 days because you're recouping that through higher premiums. And that's how you can use a rules engine without having to change any background, any code in the background, to use a rules engine and to provide differentiation in your insurable products catalog, and to be able to go to market with those insurance products without having to change any code in the background. The insurance expert comes in here, and through changing a few of these fields in the rule definitions, you can define a whole new different set of insurable products and then apply those to the claims process. Okay. I hope that explains some of it. With that, I'll hand back to you, Ali.
Fantastic, thank you. Wow, that was a really useful demonstration, Jonas. I think your walkthrough really highlights how Caseblocks process and rules engine gives insurers a platform to deliver industry-leading claims processes, really. The technology addresses claim turnaround time and reduces manual processing costs. And I think if you were to kind of sum up what that means in terms of business benefits for insurers. You know, Caseblocks as an accelerator, the platform allows insurers to pay customers out more quickly. It contains benefit leakage, whilst also supporting customer renewals and reducing churn. So a really sort of fabulous walkthrough of what that can do. Before we finish up, is there anything else anyone on the panel would like to add today about claims automation?
I think I can add from our experience working with Caseblocks, we were able to use the accelerator to quickly build industry standard rules, as well as customized products, product rules and business line rules, because many business lines have different types of requirements to cater for their clients. So it comes with automation, but it also comes with a lot of customization for particular risk, customers and products. So yeah, we were able to use it very effectively to cater solutions for our clients, and by calling it an accelerator, because we could do it much quicker than what we would normally be able to.
Fantastic. Thank you very much, Marco. So I think that's really us bringing the webinar to a close. Thank you very much, everyone, for your time here today. I think we've had some really great insights into the industry, and it's been wonderful to lift the hood on Caseblocks and see how that configurable rules engine works. It's been really useful. So I'm now just to finish, I'm just going to actually share our contact details, so everyone can see how to get back in touch with Caseblocks. If you have any questions for our Caseblocks speakers, Paul and Jonas, you can contact us at caseblocks.com, and also our InsurTech industry lead from IQ Business, Marco, you can contact him here using these details as well. So thank you very much, everyone, for getting on the webinar today. It's been really great to have you, and now we're going to bring it to a close. Thank you very much. I'm just going to stop recording now. There we go. Stop recording. Do you want to stop cloud recording? Yes.